We do come in over expectations, 196,000, but that is still very low. So we're not looking here at a major change in the initial jobless claims numbers. Continuing claims do rise a bit, 1,688,000 from 1,655,000. However, that is not a significant jump either. It looks like what is happening is we are hearing layoff announcements that haven't completely happened yet, and that also a lot of people are getting jobs very quickly once they lose jobs, because that continuing claims number doesn't jump up significantly. So I think at this point, the jobless claims numbers aren't telling us a whole lot, except for the fact that this is a very strong labor market, and it just goes along with what Jay Powell was saying the other day about if you think labor is a cause of inflation, they got more work to do.
When we have a layoff banner, and it could be Disney today or whoever, how long is it till those numbers enter the Michael McKee world?
Well, it depends on the company's plans. First of all, they may cut a lot of jobs through attrition. If they are actually doing layoffs, people may be offered jobs in other parts of the company, but also they have to give what they call WARN notices, 60 days notice, sometimes honored in the breach, but that does push out some of the actual departures. And if you get severance and it's more than you would make in jobless claims, then you're not eligible for jobless aid until your severance runs out. So all this tends to delay the arrival of the layoffs, and I don't think we're going to see Mickey and Minnie in these numbers for a couple of weeks, if not months.
Meanwhile, we aren't getting much reaction in markets, which is, I guess, as you'd expect, considering that these are somewhat noisy numbers, and it's very much in line with what we were expecting. What do you make of the belief in immaculate disinflation that seems to be sort of pervading markets, the sense that the Fed's rate hikes as baked in are sufficient to bring down inflation to their 2% target, despite the robustness that we see by every indicator in the labor market? Well,
it is a theory that's out there, and it was originally proposed as sort of a sarcastic idea that how could you have immaculate disinflation? Now it's beginning to look like they might be able to do something like that, but it's still way too early to tell. I will tout today, Rich Miller from our economics team has a story on the Bloomberg about rolling recessions, and I think this may explain something that a lot of people have been wondering about. You go back to the 2015 era when we saw a recession in manufacturing, especially in the oil industry, but it didn't show up in the overall numbers, but a lot of layoffs there. And this may be happening now. We're seeing layoffs in the real estate sector, in the mortgage sector, and that may move on to other sectors at a time when real estate then starts to improve. We're seeing some signs of that.